All right, so basically, um, what we're interested in just overall trading is what moves the markets, right?
Yeah.
So that's like the main question, and just the so there's like two ways of thinking, right? And this
Yeah.
this is this is very pivotal, I would say, right? So let's like move that up for once, and let's like differentiate between retail and smart money trading, right? So we'll go here
Uh-huh. Yeah.
to retail trading, right? And so this is what they think, right? They think that buyers and sellers
Sellers moving
move,
the market around.
yeah, move the market, right?
Yeah.
And they like think that when you have price moving like this, that that there's buyers getting in at the highs, or sorry, sellers getting in at the highs, buyers getting in at the lows, and that they think
Yeah.
that a consolidation is just a battle between the buyers and sellers,
Yeah. Exactly.
and then they like wait to see who wins this battle, right? And
Yeah.
there's like some of them who try to work within this range,
Uh-huh.
and that's why they get so tripped up when they see like a false move, right? When they see
Yeah.
price move down, they're like, oh, all right, the sellers won this battle, price is going down,
Uh-huh.
and then now they like become breakout traders, and they like see this as a sign of strength to go down, and then they start shorting the market, right?
Yeah.
And
Yeah.
that's like what they think, right? And they like think that it's just a fight between, a battle between buyers and sellers, right?
Yep.
But that's like what they think, and they like think that when it's trading, in a trend like this,
Yeah.
same thing.
Tunnel.
Yeah, so this
Right.
this is a this is an uptrend. Retail traders think that, oh, we like have the buyers are winning this battle because obviously price is going up, and then every
Yeah.
time that it touches the trend line, that's like when buyers are looking to get back into the market, and then they go up, and you know when it reverses on them, right? They're like, oh, okay, so all of the buyers took their profits here, and then now it's the
Uh-huh.
sellers that are taking the market down, and they're winning this battle. But that's just not the case. So now how we look at it is, as smart money traders, is we don't think that it's buyers and sellers. We know that there's an entity that controls the markets, right? It's 100%
Exactly.
manipulated, from um just like 24/7 it's manipulated, right? Like from that
Yeah.
candle open to the candle close, and every single day it's
Yeah.
manipulated. There's nothing that a retail trader can do to try to influence the market, right? There's an
Exactly.
entity that's moving price. Now,
Yeah.
one way to think about it is the forex market has trillions of dollars of liquidity, right?
Yeah.
This is the bank's playground, right? The forex market, this is the
Exactly.
bank's playground. And when you're talking about trillions of dollars, you can't have some people pool in their millions and try to expect price to go in their favor. You just can't, because like the comparison between a million and a billion, just, or sorry, a trillion, it's just no comparison at all. Like me personally, I'm a
Exactly.
thousandaire, so I can't move this market myself. Right? Like I can't do it, and like even collectively I can't with other
Yeah.
people,
Even
right?
collectively. Yeah.
So
Correct.
you can make small blips in the market, up, down, just like that, but you can't move the market like these guys. So what we
Yeah.
try to do is we try to get on the side of people that are moving the markets, right?
Yeah.
So that's like what we're doing. And the reason that these guys use indicators, right? And we can just strictly use price action. Strictly price action. Right? Because we don't need an indicator to tell us what price is doing, right? Because like price is already telling us a story if we know what to look for, right? Now, when I began my first my first talk in this session, I like said that when we learn one concept, that's like all we focus on, right? So we like need to learn what to focus on when we're looking for smart money and what like their objectives are for price. And ultimately that is the higher time frame. We need to see what the higher time frames we're saying, and then we move down to the lower time frame, and then we can establish daily bias, weekly bias, and stuff like that. But basically, this like these fundamental ideas are will shape how you think about the markets, right? Because let's have this be this is like your starting place on the journey, right? You could either go to this camp or you could go to this camp, right? But if you subscribe to this type of thinking, right, then that's like the only path that you're going to take, right? And yeah, there are people that win trades trading
Profitable.
retail. Yeah, there are
That's
profitable
right.
retail traders. I'm not denying that, right? But
Exactly.
and there are also people that lose money trading smart money because they're misguided, and
Yeah.
ultimately the best place to learn smart money is from ICT because he's a source of that. Everybody else is
Yeah.
just a deviation from that. So if you don't go to the
Exactly.
source of this knowledge, then you're like going to be misled, and then you're going to be losing
Exactly.
smart money. But what retail traders do is they chase price, right? It's like, oh, my EMA just broke out, my 250 EMA broke out to the downside, and and then they try to take that short. And whereas smart money, they anticipate certain things happening, right? We have levels, and then we can I don't want to say predict because like nobody can necessarily predict this market, right? Because we're not the market makers, but we can kind of anticipate where the market could want to go, to which levels it could want to go, and to where. And that's ultimately what smart money trading is. We understand that there is somebody bigger than us moving the markets, and it's not in favor of us, right? It's in favor of them.
Yeah.
And so that's basically what smart money is. We are trying to, because we're also retail traders, right? We're that small that group of traders, but we're not retail in the classical sense, right? Um, we're like retail smart money traders. We're not the banks,
Yeah.
and we're not
Yeah.
we're
Hedge
not
funds.
using indicators in that sense, of retail trading. So what moves the markets, right? So let's touch on that. So ultimately, it's interest rates, right? And now this obviously doesn't sound sexy at all. It's not talking about, oh, what's my daily bias, what's this that. But if we look at price on a monthly basis and or a yearly basis, it falls in line with the bond market, right? It moves symmetrically to the bond markets, and but that's year to year. So that is year to year, right? And then obviously from month to month down to the day to day level, what moves the markets is liquidity. So now how I recently understood liquidity to be is basically where the orders are, right? So let's just say that we have price moving up, right? So actually, before we even touch on this, we should talk about a simple thing, which is when you're selling, you like have to sell to somebody. There always has to be a
Yeah.
counterparty, you know.
Buy. Yep.
Like, so if you're saying that, oh yeah, I'm gonna sell a euro, who are you selling it to, right? You like
Yeah.
need to have a willing seller in order for you to buy, and you need to have a willing buyer in order for you to sell. So, and that's literally the basics of what liquidity is. And let me get into something else. All right. Actually, let's like start off from a more basic sense, which is the consolidation. Let me draw this better. All right. So we have this consolidation. We have the consolidation high, consolidation low. And now what we have to realize is, in my first example that I gave you about this, we understand that there's people that are willing to buy here in anticipation of the markets going higher, and there's people that are here that are willing to sell here, that are breakout traders in anticipation of the market going lower, right? Now, what is typically the case is, so let's just say that price wants to go up, right? There's people here that are buyers, right? And they like have their stop losses here, right?
Yep.
So what smart money will do is they'll trip people into going into this market, and then their stop losses here, and then now they'll like take it down here, right? And like I'm not saying that this happens every day, or this, like if you look at your charts you might find this. I'm just giving a simple basic like elementary level example, right? And then we have sellers here. This is the buyer stop loss, right? Let me just make my illustration a little bit better. And then so now after price goes here, the sellers are tripped up into the market, right? So now smart money has a counterparty for where they want to take price. And let's just say that the ultimate objective was to go here, right? And then let's just say that they take price up here, and then now they'll like want to unload their positions here, and then we can see them start going down. But as price is getting up here, people want to buy, right? Because they trade with the trend, and
Yes, exactly.
people on a lower time frame are seeing their trend line happening as they go up to here. So now what's happened is liquidity is being engineered on the downside, right? So people see this channel forming here, and now they like want to buy here. But for this example, let's just suppose that smart money reached their liquidity limit here. Now, what do I mean by that? Up here, there's not that many buyers, or sorry, not that many buyers, because so this was the area that they want to unload their longs from, right? But they need sellers, or sorry, buyers from here. So and where are the buyers waiting? They're like waiting down here, right? And
At the fair value.
yeah, and but smart money, they're like dealing with trillions of dollars, right? Their orders are absolutely massive. They can't get filled at this level. They can't get all of their orders, right? It's like when you're buying crypto or something on a certain exchange, or even stocks. You like have your different ask and bid prices, right? And same thing, with them. Is that's like the best example I could use is, so like you have a different level here, different level here. You can't get filled at all those levels. So
you limit orders.
Yeah, and then they get some of their positions filled here, right? And then maybe price would go up a little bit as well. They get more of their positions filled here. They go down. People are still anticipating this trend line forming. They get some positions filled here, and then after all of their positions get filled, price goes down. But guess what? People are buying, right? There's buyers here. There's buyers here. There's buyers here. These buyers were lucky to have seen this early, and they got on with smart money, and then they were able to they were able to take some profit. But now look, the interest in the market has changed, right? That's no longer where the liquidity is. There's more people that are willing to buy here, and there's counterparty for smart money orders, right? Like that's all liquidity is. It's just counterparty, right? So like that's like why I started with the example of, if you're going to buy something, you need to find a seller. If you're going to sell something, you need to find a buyer. And that's why price is able to go down here, 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 and then eventually the interest in the market changes, and then smart money unloads their positions, and then the cycle continues. And there's sellers here, but when the market changes its sentiment, then it starts going up. And this is what happens on a day-to-day basis, on a week-to-week basis, and a month-to-month basis. But that all respects the higher time frames. So yeah, that's basically all smart money trading is in a nutshell. Is
Yep.
you're finding who has the most money in the market, who the smart money are, and you're trying to trade alongside them. And that's basically what smart money is you are looking for the footprints of the bigger players and following in their footsteps. That's it. And I'm not saying that you're going to be right 100% of the time, because you never will. And one of the key points is trading isn't about money, it's about probability, right? Like that's what most people get wrong. It's not about the
Yeah.
money. The money is just the reward you get for being right on a live account. That's it. But if you can't be
Yeah.
right most of the time, then you're not gonna have like that profitability. And the best way to be right is to trade smart money, right? I mean, I'm not like that. That's why I said, like in the beginning of this talk, I said that there's retail traders that make money. That's true. There are,
Yeah.
right? There's people that are like millionaires that trade with EMAs, moving averages, support resistance in the retail sense, RSIs, all that are profitable, that do make money. And there's people that are in the smart money camp that lose money, right? Like you do have those exceptions, but the rule is if you follow the bigger players and if you understand price better, then you're going to be a profitable trader easier. That's being a smart money trader is the path of least resistance. And it's all probability. It's all probability. And if you want to get paid in these markets, you have to be right. That's it. And that's
Perfect. That was a nice read from you.
yeah. So yeah, that's all I have for that.
Perfect.